Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Today we're actually going to take a look at the Ethereum chart and go over a trade that we took in the group, why we took it, why it played out perfectly, how we identified our targets, and just basically how we determined our stop loss, our target 1, target 2, take profits, and basically how we use like minor amounts of leverage to increase our position substantially. So essentially what we're looking at is we're looking at this horizontal support line here at 395 basically, and you'll notice that on the way up here we found resistance, came down and found support, bounced and kept hitting our head on that green line there, and then finally we were able to break above it here and we got the massive move up. So we know obviously that's a substantial resistance, and then it flipped once we got back on top of it to support. Although we were able to break down below it, we got back above it again, broke down below it, and then as soon as we got above it again, it became very substantial. Let me just brighten that up just a little bit so it's very clear exactly what I'm talking about. So you see that very thick green line right there? That's the one we're paying attention to. So once we got all the way up here, obviously we knew the entire time that this was getting ready to do a massive dump and liquidate everyone. So obviously we were on top of all this. If you didn't see the Head and Shoulders video, you can go back and watch that. Obviously I put that out ahead of time. But that is a very important part about these markets, is being able to determine what the market is going to do before it does it, not just come on afterwards and talk about how you knew it was going to do that. That's obviously of no use to anyone. Hindsight TA is useless if you're a trader, if you're an investor, if you're basically anything. Although you can go back and look at charts and learn patterns and learn indicators, and in the future hopefully be able to use those in a way that you can actually see what's going to happen before it happens, so that you can actually like base your trades and investments or whatever you want to call it off of that. So once we came down here, obviously found support on a couple of our random diagonals. I'm not going to get into those right now. We're not going to pay attention to those and how I use them. But once we found right here, we started consolidating in this area. And when we continued to consolidate and then could not break back above that, that's where we took our short position. We took our short position here and immediately got that sell off. We did not close out the position yet at that point in time, but it's very clear. Typically you see a wick like this and it gets bought up aggressively like that, you're not going to want to take a short position back into it. But a lot of times, because it's basically like the market saying no, it's rejecting lower prices. But this looked to me like someone was aggressively trying to defend their position. Looked like someone had a large long position and was attempting to basically stop it from getting liquidated. So when someone like me sees that, we immediately assume that that's easy money, and our plan then is to go ahead and liquidate those people. So they have basically this time up here to attempt to exit out of their position, and if they don't exit in time, we're going to liquidate them. So we took our short entry up here, posted it in the group obviously, and we took this one specifically for multiple reasons, multiple levels of confluence. It's a 4-to-1 trade. I like to look for minimum a 2-to-1 trade, basically like 2-to-1 risk reward or reward risk. So we're risking 4% of the position based on our stop loss essentially coming up here and taking out the previous highs, in which case we'll admit that we were wrong and we would expect upside. And then that 4% is going to correspond with 8.54% to the downside. So 8% obviously is twice 4%. So that is flipping a coin, and we can be wrong twice as long as we're wrong, as long as we're right once. We basically break even, actually do like a little bit better. So with a 8% reward and only a 4% risk, and obviously like so many levels of confluence, we can take that short trade. Our initial target is going to be the 382, and you'll see the 382 in green right here. All that is that's the micro fib. So we're going basically from that previous high when Ethereum had topped out back here. It topped out on June 2nd, and once it topped out, it came back down, and that was our ultimate low after the top. So that's where we draw our fib from. So we draw the green fib up here to the absolute high, and then the retracement being Basically, once we had confirmed the 236 and found support there and put in those multiple wicks before, it was very clear that what was happening is, we had reached the top and that we were going to be retracing at least that wave. So now we have the 236 lining up, and that's where we previously got rejected. So we would expect our next target to be the 382, which obviously was hit, was nearly hit with that wick coming down here. But whoever that was attempting to defend their position, or defending and then dumping their position, could go either way. That was target 1, that was hit. And then you'll see we had a massive wick come down here to our target 2 as well. And the target 2 was hit also. That's going to line up with our diagonal support resistance line right here in red. It's going to line up also with the 236 of our macro fib. And now that macro fib is going off of basically the entire move up. So that was our bottom right here when the stock market crashed back in March, all the way to the top right here. And then what we'd expect to happen is once we hit that 236, we would get an aggressive bounce, a rejection, and then we will come down to the 382 next, and then another aggressive bounce, rejection, and then the 0.5 or the 618 is where we'd expect somewhere in this range between $255 Ethereum and $172 Ethereum is where we'd expect basically the price to potentially get picked back up. Now, in the event that it's not getting picked back up aggressively and we're not continuing to the upside and we are going to compromise this short-term uptrend that we have been in now for basically the better part of the year, we would expect us to come down to the next fib levels, and then eventually, if we don't put in a higher low, potentially come down here and take out the all-time low in like that $89 range. So at which point in time, we can extrapolate our targets based on the price action at the time. But essentially, the most important thing to focus on right here is basically the Fibonacci targets, and then I'm going to pop up the moving averages, and we'll see how those correspond as well. Obviously, I use different moving averages than everyone else. I have my own system. It was created by me, used by me exclusively, and I share it with everyone for free. So if you're interested in that, please get in the comment section or actually the description down at the bottom of the video. Go on TradingView and get my free indicators, as I do share them with the community in hopes that people will actually learn how to do TA instead of just following people that have no idea what they're talking about blindly. So it's very important here. When we got the 4-hour close, the 8 and the 21 cross was very clear that we would be selling off massively since then. And you'll notice that once we got rejected, once we were below the 21, we found support on the 55. The 50 rather. We attempt to bounce up here, got rejected again with that wick, and that's when it was very clear we were selling off. So we sold off. We got a little bit of support from the 200 SMA in dark blue. We found some support on the 200 EMA. Could not get back above the 200 SMA. Sold back off, and then this was a clue here to enter the short. We were getting rejected consistently on the 8 EMA. So when we're getting rejected constantly, what's going to happen is going to keep smashing the price down until it doesn't. So eventually we would expect us to get back above the 8, and then immediately we'll have our target up to the 21. I don't know when that will happen. It's probably not going to happen anytime soon, but it potentially could. After seeing this other massive wick right here, you will notice that if you switch over to like a Bitcoin chart, essentially it's just bouncing in the same area right here. The reason is because when Ethereum sold off, it didn't sell off as violently. Although it sold off percentage-wise more violently, it didn't sell off like moving average-wise and fib target more violently because it had such a massive move to the upside because of the giant DeFi bubble and everything. So essentially what happens is when all that money is getting pulled out of like all these trash DeFi projects, it goes into Ethereum because it's essentially like it's like the Bitcoin pair. Back in the past in these markets, a lot of things did not have a pair directly to the dollar or directly to a stable coin or Tether or whatever it was. They were paired only to Bitcoin. So when somebody wanted to buy those coins, they had to buy Bitcoin first. When somebody wanted to sell those coins, they had to sell those coins into Bitcoin. And it's the same way with Ethereum and what's going on with DeFi. They have to sell out of their trash coin into Ethereum the same way that they had to basically like trade Ethereum to receive their trash coin of choice. And as you'll see, the fines on or the fees on Ethereum have gotten so out of control that people were hesitant to even get out of their trash coins, thinking that the fees were too much. They would just wait and not get out of it. The same way when the stock market started crashing initially, people did not want to sell out of the stock market because they know they have to pay taxes. So if the stock market's not going down by at least like 30 to 60%, it wasn't worth them getting out of the stock market. But again, once it becomes evident and very clear that you're going to get absolutely wrecked in these DeFis, the same way that the stock market became evidently clear that obviously these valuations are extremely high, overvalued, and basically now people are realizing, okay, I need to exit this position. So that's what's happening, and that's why Ethereum is rolling over so badly, and that's why we're basically shorting that and taking all your money. So basically we got rejected by this 200 exponential. The next target, which you'll see lines up perfectly with our fib targets, the 382 comes in with the 377 EMA, and then the 528 EMA is going to line up with the 236 and the 0.5 of the macro. So and if you need to slow that down and go back and watch it again a couple times, by all means, I encourage you to do so. As you can see right now, we are getting picked up by the 377, attempting to save this move right here, which case we will try to get a move back up to the 8 EMA. If that's successful, we would expect once again to come up to the 200 exponential and attempt to get back above the 21, but once again, I think that would fail, and we're just going to continue selling off. This is clearly, these massive wicks are someone or an exchange, something trying to defend their positions, basically trying to fight the market and say, no, we're going back up. So they're buying up all this right here, and then basically this is them giving up or the market overpowering them, and then we drop down to the next level, and then again, because people are so stubborn in this space and cannot admit when they're wrong or don't have time to get out of their massive positions, they just continue to get wrecked, and that's why we continue to see this sell-offs violently like that and then get bought back up, and then you'll see just distribution continue to take place in this range, and then once again we'll sell off as they basically concede to the market that it's all powerful and they are weak, or basically they decide and dump their own position as well. So and now if we switch over to the daily, we will see obviously when we confirm this downtrend right here between the 8 and 21, we got that massive sell-off. That's basically people realizing, okay, we're not in an uptrend anymore, and then you'll notice that the 50 SMA is getting ready to cross over, 55 SMA is getting ready to cross over the 200 SMA, and then here now we have our 50 bright green exponential moving average coming down violently to the 200 bright green moving average, which point in time that will be our death cross on the 4 hour once that happens. And then if we switch over to the daily time frame, you will see we attempted to save the 8 and 21 right here, got that massive move back up. This is called the throw over. This is us walking out to the edge of the cliff and realizing that we are going to fall off of it, but instead we throw the baseball up as high as we can, basically convince people that the baseball is going to get to the moon, and then finally it runs out of velocity and sells off violently, even lower than where it started at. And now you'll see we have just now confirmed the 821 cross, which was like a clear signal to us as well why we want to be shorting the market. And it's very clear right here. This was our support. This was our support. Once we break down under it and this became our resistance, it becomes very clear that we will be violently selling off. At which point in time we always expect to come down to our next substantial moving average, which is going to be the 89 on the daily. And when this fails, now that we have our negative cross, if we're unable to get back above $400 on Ethereum, if we're unable to get over a 15% move to the upside and then continuation, this is going to stay crossed. It's going to get even more violent. And then, now that we've already come down to the 89, our next target is going to be $273, the exponential 200 moving average. The more we sell off and the more we start taking out this basically entire area right here, the more violent it's going to get, because you have so many people that bought in between $250 and $500, basically $250 and $490. All these people are going to be upside down in their positions. All this price action, even the people that were accumulating through here, what happens is they get greedy and greedy and greedy and greedy and keep putting more money into the market and keep putting more in and more in, and then finally when they start getting wrecked, they're losing all their profits, plus they're going negative on this entire position because they don't see what's actually happening on the chart. So here we're getting picked up currently by the 55. A lot of times you'll see an exchange or a large position try to push us back up here to the previous levels, and then that's where they'll liquidate their position, and you'll see like that violent rollover. So obviously that's what's happening now. We are basically getting a violent sell-off. We got rejected once we crossed underneath the blue. attempted to come back up. We put in multiple green histograms, could not even get back up to the slope line, got rejected. That's a very, very clear signal. When you're underneath the slope line coming back up to it, it's going to act as resistance. And if it's still blue, in the same way that if we were above it and we came down to it and it was still red, you would expect it to act as resistance. So as soon as that sells off and gets more violent, it's going to sell down here. And we took out basically the low right here, but we haven't even come down nearly as low. So the actual price action was way up here with this big move right there. And then now here we have the blue still way up higher while the price action is lower. That's a divergence between the indicator oscillator, and what you would expect to happen is continuation sell off to the downside, at which point in time eventually we would expect this to come down here and either put in a higher low, but with a more violent sell off, or vice versa. We would sell back off, and then that would correspond basically with what's happening in price action. So that's what we're going to look for, a divergence. But essentially what's happening right now is it took almost no energy to get the price down lower. And we're not even close to bouncing this. If we come down here and the blue should bounce off the purple and we get continuation to the upside, that's great, and we could potentially get a move out of it. But as you'll see, the knife is down here at a critical level, and that's the only reason we're getting the bounce right now. Basically, like I said, someone's trying to save their position. Looks like absolute desperation to me. I'll see you at $270 something in the near future. Although we could definitely get some potential upside here. Saturdays are typically bullish and we get like a decent run up. But we're just now at the zero line on the daily. We're just now crossing over red on the slope. We're literally in a downtrend on the daily. Moving averages, we're literally pointed down on the TJD the Jewel Thief. There is absolutely nothing that tells me right now that this market is just going to start going back up and that we're in an uptrend and we're going to continue to the upside. So let's switch over to Bitcoin and see how that lines up as well. Once again, you'll see someone was desperately attempting to save their position. We hit the measured move, which is where we would expect a bounce. When we came back from the measured move, you'll see it lines up with all the Fibonacci's. We got rejected by the 8 moving average. We got rejected by the 528 moving average. And Bitcoin actually looks like much more bearish than Ethereum does, because essentially all that extra money was flowing into Ethereum out of all those trash coins. So while you'd expect all the worst and weakest assets to sell off the most, that's going to be like essentially like all your DeFi stuff is going to sell off the most. Then next is going to be like your regular stuff. And then finally, when Ethereum sells off, it's going to sell off the most violently. You'll notice that our Ethereum Bart Simpson pattern did not go nearly as low right here. And then you'll also notice, obviously, that the head and shoulders looks a lot different on Ethereum, because Ethereum put in a higher high right here because it got that massive throw over, as where Bitcoin was just rolling over, and leading the market to the downside. So now that we've got rejected by the 528, basically like in the same way that price action would be in a blue sky breakout, if there's no resistance above our heads, there's absolutely no moving average support below us. So when the bottom falls out on this, we would expect it to fall out to either key fib levels or previous support resistance flips. You'll notice right here that where we were finding support at was basically like all these little wicks that we put in on the way up. And then also, I'm going to switch over to the Fibonacci's real quick. Same thing. You're going to notice it's going to line up perfectly with our Fibonacci targets. The head and shoulders measured move was hit, at which point in time people like me are going to take massive profits. Everybody else is going to think that this profit taking is support, and they're going to try to buy into it, but really all they're doing is just buying our bags. I am closing my short position, and that's what these buys are. These buys all through here, those are me closing shorts in massive profit. Okay, and then once it gets back up here and starts getting rejected, or once we get like a nice bounce back up to like the 382 or something like that, all we're going to do is just re-enter shorts. So once again, the people who have no idea what they're talking about are basically going to continue getting wrecked because they think now we're in an uptrend because we got a dead cat bounce. We did not put in any divergence. We barely even sold off from the previous point, and once again, these wicks are not bullish in the same way that you would normally expect like a large wick rejection of lower prices, or vice versa if it was on top. These wicks are just take profits, and these wicks are literally just people or exchanges defending a position they were wrong about, attempting to push the price back up so they can get a better exit, because they don't just want to admit that they were wrong about the price action and direction. So if we do get a move back up here, a violent one, I could see it coming back up as high as 10.938. but you had this whole entire time to trade with the trend on the way up. So why now do you all of a sudden want to take longs when we're finally confirming a downtrend? Once we're finally violently selling off, it makes absolutely no sense to constantly fight the trend. And that is how the majority of people in trading and in these spaces get wrecked. They are constantly trading against the trend because they're always late to the party. Stop waiting to flip. When the price tells you we're going in that direction, in a different direction, when the trend is flipping, flip with it. Do not try to fight it all the time. Here we got the cross on the 4 hour, 821, attempted to get back above it, couldn't get above the 200 exponential, massive, violent dump. Could not get back above the 8, could not get back above the 528, massive, violent dump. Somebody in denial, pushing back up, will not get above the 8. If we do, next target will be the 21 of the parabolic SAR at 10.7. But once again, you would expect us to come back up in this range and get violently rejected. Again, there's no divergence in the market. There's only convergence. This hard buy signal, when we get this right here like that, that comes at the absolute top of a trend right before it sells off. Look right here. Hard buy, sell off. Hard buy, sell off. Hard buy, sell off. These hard buy signals that you're getting, hard buy, sell off, these hard buys are counter trend hard buys. They're fake outs. Okay, you need to use these indicators in the direction of the trend. That is why so many people get wrecked in these markets. They want to see the price go up. They want to see the bounce. They want to see the moon boy coin. It's not going to happen. Just admit it. Get on the right side of the trade and learn how to actually make money. You need to retrain your brain and listen to what the market is saying. Okay, you don't read a book and then make up your own ending. You read the book and then, as you read through the book, you get an idea as to what's going to happen, because the market or the book is telling you with its words, with its pages, it's spelling out to you what is going to happen. So stop just assuming what's going to happen in the end is the hero is going to swoop in and Bitcoin is going to save the day, and you're going to be a millionaire and get to quit your job. You're going to be able to get a new wife and a new car and fly to the moon with Elon Musk and help him mine space gold. Not going to happen. Let's be realistic in these markets and make actual money. So yeah, here we go. We're essentially the equivalents of a blue sky breakout, but to the downside now. There is absolutely no moving average support. We are getting, we already got the death cross on the simple moving averages back here, the 50 and 200. And now here we got the death cross on the exponential moving averages. Couldn't even get near it at all. Couldn't get above the 528. Couldn't get above the 8. So here we are selling off finally again. As soon as this person gives up and quits and sells their position, we're going to get another violent sell-off. Switch over to the daily on Bitcoin. And same thing again. Attempt to get the cross, 8 and 28. We're under it. Attempt to push back up. That is a throw over. We couldn't even take out the parabolic SAR. A lot of times we'll come up here, take out the parabolic SAR, flip it green, and then we'll sell off. So be careful on that, especially on longer time frames. Once that confirmed crosses over here, we get the violent dump. We cannot even get above the 89 exponential moving average. We put in multiple wicks on the daily. Here, rejection of the 89, and you would expect to see violent sell-off. We flipped over the red slope on the TJD TD MACD. We're putting in red histograms. We're underneath the slope line. We are just now getting below the 0. So there is tons and tons and tons of room to the downside potential still. Okay, stop saying these things are exhausted or tired or they can't go down any further. Once again here, the knife comes down. We get that violent sell on the knife. What you would expect to happen is this comes back up, we get an attempt back to the upside, we sell off again, and the knife puts in a smaller point, a smaller red knife comes in here. That's when we can start developing divergences. Same thing here, the blue gets back up, starts getting rejected by the purple, creeps above it. Everyone takes this buy signal because they're chumps. Don't listen to a counter trend buy signal. It's a fake out. Basically, market makers have the same knowledge and way more experience than your typical trader or investor does. So expect that when you get these counter trend buy signals, they're fake outs. They're basically telling people, oh yeah, buy now. And you're buying into resistance at the top of a dead cat bounce. So there we have it. The blue is going to now cross back below the purple at some point in time. We might consolidate here for a little bit and then sell off, and then we're going to get the hard sell. And the hard sell is actually a reliable signal. It's in the direction of the market. Now, in the event that we do get back above here, what are we going to do? We'll retest the 8 back up here at 10.9 like we were talking about, and potentially get rejected again by the 55, the 50, and at that point in time, the 21 will be in that range as well. I do not think we're going to be continuing to the upside. I know everyone just wants to be bullish and wants to hope and wish and pray, but you need to stop doing that and just start listening to the market. So we made it down already to the micro 618. We could potentially see like a 2 fib level bounce. We already got back to the 0.5. So again, the 382 is going to come in line with 10.9. Starting to see these levels of confluence. Starting to see the support resistance flip. Starting to see how the Fibonacci's line up. Essentially, we are finding all this support down here, coming back up, going to find this resistance right here, get rejected, roll back over, and then we would expect new targets, and we'll expect the next fib level, which is 786. That is also the 236 of the macro, like we were talking about, from the total bottom right here to the total top. Once we confirm down to that 236 at $9,461 roughly, that's going to tell the market, that's going to tell everyone, including me, that this was the top out, that we are now topping out. We'll get a bounce, and then we would expect ourselves to do like a legitimate retracement of this entire move. So that retracement is going to take us down to the 382 at 79.50, so 7,950. The 0.5, this is the golden zone at 382 to 618. The 0.5 is going to come in at 6,899, so 6,900, and then finally the 618 is at 6,000. So it is not unrealistic to think that if we are retracing this move right here, that we're going to put in a 61.8% retracement of the up move. Okay, that's literally, or Charles Dow theory, 50% of the up move. Which is going to take us back basically between 6,000 and 6,900. Now, could we come back down here and come down to 49.50? Yes. Could we get a violent sell-off and come down to 4,400 or 4,200, but still put in a higher low and potentially be bullish? Yes. But keep in mind, we could literally sell off to between 4,200 on a wick and 5,000 on a daily candle close. $4,200 to $5,000 on a daily close and still be bullish in this market for a potential upside movement. That would still keep us inside of the triangle consolidation pattern that we have been in for years. The consolidation pattern that we have been in for years since the initial opening of the CMEs that rejected price permanently and put us in this essential like triangle consolidation pattern. So before you get super bullish that we're in an uptrend, remember that when the CMEs came out back here in 2017, that we have never put in a higher high. We have never put in a higher high. We are constantly in a downtrend or a sideways consolidation pattern, whatever you want to call it. And if you flip over to the CME chart, we did not ever take out this high on the weekly. We did not ever take out this high on the monthly. We only barely got above it on spot, and that's only just to psych out suckers in the markets who only look at spot markets. It's only for the newbies, okay? Because what happens? The market is closed. 2/3 of the market is closed, okay? And then 1/3 is open. That's the spot market, okay? 1/3 of market participants are taking place, and then we put in this little high right here, okay? And now that's why everyone's so bullish. That makes absolutely no sense. And now here we have flipped over and started putting in red histograms on the monthly. And typically what happens is massive amount of continuation. We put in a red histogram, massive amount of continuation. So even if we flip another green one along here, this monthly is basically telling us we just started the month and we're already doing red histograms. So even if we put in a higher low on the histogram at some point in time, we still have plenty of room to come back down here to that 4,000 range. Or if we're lucky to get a close, like this one was 6,300, 6,360. So maybe we get like, a higher close somewhere up here, like 75.60. But the close doesn't matter if you get wicked out on this massive wick like this. And, that's what I expect to happen when the traditional markets stop out and everything starts dumping and all of a sudden everybody just wants to get into cash. And, that's it for the TA today. I'm just going to talk real quick about something I've been paying attention to. Everyone is extremely convinced right now that the Federal Reserve is going to, 1, keep rates low, and 2, wants inflation to go up. And the way they're going to do that is, everybody's saying the same thing. The way they're going to do that is by devaluing the dollar. That's wrong. I don't think that's right. Did the Fed ever say they were going to continue devaluing the dollar? No, they didn't. I think what they're going to do is strengthen the dollar. And that's going to change everything, because when the dollar's strong and bonds have a higher yield than any other bonds in the entire world, all of a sudden all this money is going to rush in to bonds. It's people investing in the future of America, people buying into the strength of the dollar. So the dollar's been going down forever, so we could get a temporary retracement for a couple of years on the dollar, and it could be strong, and then it could fail down the line. Okay, you have to think macro, you have to think long term, what's going on here. It makes sense for the king to stay on the throne as long as he can. The American, and whatever, I'm not trying to say America is better than anybody else or anything like that. I'm talking about metaphorically. The king does not relinquish his throne. He does not just say, oh, let's weaken the kingdom, let's take down the gates, let's drain the moat and just let everybody come in and ransack the place. No, he's going to do everything he can to stay strong as long as he can. All right, he's going to sacrifice all the peasants, whatever it takes. So what would make inflation go up but also rates stay low? They keep the rates low, and then we have a lack of supply. A lack of supply is going to do the same thing as increased demand. It's going to do the same thing as devalue the dollar, but without actually devaluing it. Well, based on the economy and what's functioning and what's being created and what's being manufactured right now and what's being imported, let's say we go into a trade war with China or like other countries or whatever, all of a sudden less goods are coming in, there's less goods available, so that's going to cause inflation, because there's the same amount of people fighting for the same goods with the same money. So even if interest rates are low, there's going to be a massive amount of inflation taking place because the supply is cut off. So think about that, because did the Federal Reserve, did they come out and did Jay Powell say, okay, there's going to be inflation because of this? Did he say, this is how we're going to ramp up inflation? This is how we're going to get inflation to run hot? No, he did not. He literally just said, we're going to let inflation run hot. He did not say how they were going to achieve that. He said they were going to keep rates low. Yes, he did say that. Correct. So I would expect low interest rates. Who's that benefit? People who can get money. Who can get money? People who have good credit. Who needs money? Not the same people. Okay? So that's basically throwing the peasants to the wolves to save the king, which is what I expect. That's going to help strengthen the dollar, because even though inflation rates are low, we'll still be able to get high rates on things like bonds, like 10, 20, 30-year treasury bonds. The dollar will stay strong and continue to go up in value. Gold and silver will continue to go up in value because some people don't want to invest in the dollar. And then meanwhile, all the other countries are devaluing their currencies. Therefore, they're getting weaker in comparison to the dollar. So what's happening right now with the euro and European Union and everything, they're getting mad because their dollar, their euro dollar, is strengthening, so they cannot buy as much exported goods from other countries. So they want to weaken their dollar. They want to print as much as they can, give it out to the people, and take away their buying power, percentage wise, but increase it like throughout the world. But the problem is that there's limited amounts of goods going on right now. So because there's less manufacturing and everything, that extra money is already going to be suffering from like that inflation, because there's lack of goods, but the same amount of demand. So what does that do? If the U.S. strengthens their dollar, everybody else weakens their dollar. It's going to strengthen us even more. It's going to make our economy and everything even stronger. It's going to make us as a nation even stronger in the long run, and help the system not to collapse in the long run, or at least the short long run. And what does that do? Helps America, makes it grow powerful, makes it go strong, and then in the meantime, basically everybody else's money flows into our money because it makes us stronger. We are strong. They want to buy the strongest. It's like the same thing as when you buy into a strong stock. You buy it because it's going up. You don't just buy the worst one. You don't buy the one that's getting absolutely thrashed by the markets, hoping one day that your lottery ticket hits and it finally goes up. No, you do not keep betting on the losing horse. You bet on the winner. So if America can keep their dollar strong while everybody else weakens their money, what's that going to do? It's going to help it go stronger and stronger and stronger, because we're going to have a bunch of outside money flowing in as well. So that's what I think is going to happen. It makes perfect sense. It also explains why they're being so vague about what they're saying, like that they're going to let inflation run hot, that they're going to keep interest rates low, but they don't explain how that is going to make inflation go up. Well, I just explained it for you. You're welcome. Crypto trend trader, a little bit of technical, a little bit of fundamental, and a little bit of what's going to happen in the future. So everyone is very convinced as one thing is going to happen, but you need to pay attention, because while they're waving one hand in front of your face saying, look over here, the other hand is doing something shady behind your back that you don't realize. Not to mention that the actual like inflation rate and the nominal inflation rate and all that stuff don't even make sense. The same way as all their job numbers don't make sense. They're essentially claiming that they created like all these new jobs and everyone's going back to work and things are great, but in all reality, they're just less bad. They're better than they were. They're better than they expected, but they're absolutely horrendous right now. These people are delusional and they think that American people are stupid. If you look around and you see there's less cars on the roads, there's less people at stores, there's more places going out of business. We are creating nothing. We are manufacturing nothing. There's no infrastructure being built. There is no positive changes being made. There is no cure or anything like that. We don't have a new vax coming out. They didn't cure the V. They're not going to, not anytime soon. We have never, ever, ever in all of time had a vaccine for or cure for a virus. So there's no reason to think that all of a sudden they're just going to be able to miraculously cure it overnight, let alone in a couple months, just because they threw a ton of money at it. So please be careful who you're listening to. Please understand that these economists have no idea what's going on because they're all looking at the micro view. They're only looking at their own countries, their own states, their own experience. None of them are looking at the big picture. We have never had an event like this happen before. We have never had a world economy crash. We have never tried to restart the flywheel on the entire world before. Okay, and the truth is, here in the United States, we are way below the curve. We're way behind. We were barely producing anything before, and we're still producing nothing now. If you want to say that we have ramped up manufacturing, what are we doing? We're making ventilators that no one needs because they were wrong about the whole thing from day one, which I was saying in the beginning. And now what are they doing? They're manufacturing PPE and trying to create vaccines. That's our manufacturing. That's our productivity. Doesn't make any sense. It makes absolutely no sense at all. And then on top of that, you have now like the craziness going on in the country. You have the presidential race coming up. You have the two worst candidates probably in all of existence. I don't care what you say, but the truth is, if that's the best people that we have out of like whatever 300 billion people or whatever, and those are the two best candidates we have, we're basically doomed. Sorry to hear it. Sorry if you love one of those guys. But the truth is humanity can do a lot better than that. That's enough for today. Crypto Trend Trader, and I'm out of here.